Have you had the experience of ending up with a huge losing day by taking many small losses? If you have, then you've been chopped up by the market. And as I'm sure you know, it's not pretty. It wears you down psychologically and financially. That's why they call it death by 1,000 cuts. And in this video, one of our professional traders will be sharing his secret for avoiding this painful but all too common trading issue. I'm Mike Bellafiore, and we're a long-standing proprietary trading firm in New York City with numerous highly successful traders, almost all of whom started their trading careers with SMB. We hope you agree you found the right place to potentially grow your trading account.
One of the biggest challenges for traders is to avoid small losses that could add up over time and lead to what is commonly referred to as death by 1,000 cuts. I've had to overcome this challenge as a prop trader at S&B Capital. This is a situation where a trader enters a position without a clear plan or conviction and as a result takes many small losses. This can happen when a trader lacks confidence in their trade idea and reacts to short-term price movements by frequently entering and exiting positions. This behavior can be detrimental to a trader's performance and can erode their mental capital. As an example, their executions might look something like this. It's a frustrating and costly experience that many new traders I teach run into, but it can be avoided by following a few simple steps. Before you enter a trade, it's important to have conviction in your idea. This means you believe in the direction of the trade and have a clear plan for both your stop and potential target. One way to gain conviction is by adding up how many checks in favor you have for the trade to work. For example, if you only have one or two, it's probably best to pass on the trade. But if you've allowed 7, 8, or even 9 checks to stack in your favor, it's worth taking the position and you'll be in a better frame of mind to accept the risk. For example, if we're trading an opening drive and you buy right off the open because you see price moving your direction and volume, that might not be enough to give you conviction. You might jump in and take the offer, and at the first sign of trouble, you hit the bids for a loss. Then, the stock starts moving your direction again, and you hit back in, and then the first sign of trouble, you take another loss. But if you plan the trade a little better and see that the stock is gapping up over an important resistance level on the daily chart because they reported earnings, beat on EPS and revenue for the quarter, and then raised guidance for next quarter, and raised full year guidance, and it's above all key simple moving averages on the daily, and then off the open, it's doing very high R-vol, pulls back to a clear pre-market support, holds, trades back through VWAP and the opening print on the highest volume bars of the morning, well, now you have 10 checks in favor instead of 2, and you'll feel more confident holding that position and accepting the risk. That's the difference between the thought process of a new trader and a pro trader. And that's an example of what I'm going through in my head as a trade develops. And that gives me confidence to hold the trade and be willing to accept the risk to the proper stop, which might be low of day or might be a move back to red on the day. It's also important to remember that you should never enter a trade without a clear stop in place. The formal definition of a stop is a predetermined level at which you will exit the trade if the stock moves against you. My definition of a stop is a price on the chart where your idea is completely invalidated. This helps to limit your losses and maybe more importantly, protects your mental capital, which will allow you to trade more ideas with a clear and level head. It's also important to note that you should be accepting the risk to that stop price before the trade is even on. Another important aspect of trading with conviction is to have a clear target in mind for where you think the stock can trade to. For example, if you're long, that could be the high of day, an ATR from low of day, or it could be some higher time frame resistance level. This is the level at which you expect to take profits. While you're in the trade and it's working, an exercise you can do is to ask yourself, is price action still in favor of this trade? Are there any signs or checks against me telling me that this trade might not work? By having a clear target, you'll be able to stay focused on your plan and avoid the temptation to exit the trade too early, unless you could start adding up clear checks against you that might decrease the probability of the trade working, such as a break in the trend, or to be more specific, an opening range break that ends up reclaiming the opening range and holds back inside that range. Well, those are checks against you, and you might want to consider taking some profits or hitting out of some of the position before your stop is hit. Death by 1,000 cuts is a common problem that many traders face. To avoid it, it's important to have conviction in your idea by adding up those checks in favor and a clear plan for your stop and target. Remember two things. If you're a developing trader and can't count at least 5 checks in favor of the trade working, it's probably best to pass on the trade and save yourself time, money, and the frustration of putting on a bad trade. And the second thing to remember as a developing trader is your stop should always be a place on the chart where your idea is completely invalidated. Thanks for watching.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of S&B Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with S&B to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.